does a CFO do, and how does the CFO work with the bookkeeping team to serve the business owner? Because those team dynamics, when they work well, are powerful. So how does that work with your business?
Okay. So a chief financial officer or a CFO in a large company, that's the person who's got an executive role. They are working with the CEO, the vice president of sales and marketing, the chief operations officer. They're part of the executive team.
Okay.
In a business that's smaller, that can't afford a full-time on-staff chief financial officer, a fractional CFO performs the same role, executive level leadership and oversight of the accounting and financial part of the business, financial planning and analysis. They're part of the executive team. They help take the executive vision and put together the financial component of that. If you want your business to look a specific way in a couple of years, you're going to have to make sure that the financial statements that are required to have it be that way are going to be in place. Okay, so the CFO can help put those together, put together the vision financially speaking, and then reverse engineer from there to create the roadmap or the pathway to go from where you're at now to where you ultimately want to be. So how does that work with respect to collaborating with a bookkeeper or even a tax accountant at the end of the year? All three of those are very integral to a business that is in a growth mode. And it's not necessarily the case for a small business. In a very small business, if you're just a startup, one person, an entrepreneur getting your business rolling, you can have a bookkeeper. You should have a bookkeeper, and a
Yes.
good bookkeeper will help you get to that point where you've got $500,000 in annual revenue or $1 million in annual revenue. That point where you begin to build a team, and that team is starting to function effectively. But you'll get to a point where you need to leverage your time and your expertise, and you'll get to a point where the bookkeeper who's focusing on making sure that all of the transactions are being recorded properly, they're not going to be focused on financial planning and analysis, which is everything looking forward. The bookkeeping and the record keeping is primarily making sure that everything looking backwards has been done properly, that you're compliant with government regulations, that you have good information in the books. Because we come into the picture and we look at the baseline. What are your current financial key performance indicators or KPIs? Do we know what those are? Okay, if we do, if the bookkeeping's been done well, then that's fantastic. And we can say, from there, we can say what's going right, where is there an opportunity for improvement, and how are we going to chart our course from where we are now to where we want to be. And we'll collaborate with the bookkeeper to make sure that the business is set up in such a way that we can do proper financial planning and analysis, proper budgeting and forecasting. So we'll work with the bookkeeper on the chart of accounts. And this gets into some technical areas, but we want to understand what are the gross profits, not just for the business as a whole, but if there's different products and service lines, what are the gross profit margins for the different products and service lines? Which products and service lines are providing the most return on invested time and money and energy? The bookkeeper can help us set things up properly, help make sure the reporting feeds into what we're trying to do for the company to help them reach their vision of success or to realize their vision of success. And so a good bookkeeper is gold for a company that's small. When a company becomes a little bit larger or a lot larger, a great bookkeeper is fundamental, absolutely. A good CFO is going to be focusing in a different area, looking more at the future, looking more at helping make sure that the decisions you make are good decisions. Are we going to have enough cash if we move facilities now? In 6 months, we're going to have the cash we need. If we give better terms to our clients or give them more time to pay their invoices, are we going to run into a cash crunch, a cash flow crunch? These are the sorts of things we're going to be analyzing. And then at the end of the year, the tax accountant is going to be looking at the income tax for the business. And it's a different set of skills. It's a different area of focus. The best way to look at it is everybody has their focus or their area of expertise, their lane. Bookkeeper, key component of any small to mid-sized business that's looking to grow. CFO, fractional CFO, also a key component of any business that's already starting to grow and that's wanting to grow more. And then the tax accountant, well, you have to pay your taxes. That's necessary. But that person's not going to be there doing your bookkeeping, week in and week out, or your fractional CFO work month in, month out. They're going to be there once a year for sure, maybe twice if they do a bit of preliminary tax planning. But to have those three areas, bookkeeper, CFO, tax accountant, working together and collaborating together in a synergistic way, it only means that your business is much more likely to be optimally effective, optimally efficient, optimally profitable, and it's the best way to manage your cash and just your year in and year out financial component of your business.
Nice.
When we're collaborating with shareholders or the lawyers of the business, we'll get involved with the potential investors, we'll get involved with bankers, depending on the scenario. There's times when we have the hand on the baton with others, and there's times when we're just carrying it along on our own and
Okay.
working directly with the executive team to help them make decisions like a CFO would. But by the time you're at $3 to $5 million in annual revenue, typically speaking, investing in a CFO, fractional CFO, is a no-brainer. The return on investment is going to be substantially more than the cost. At the same time, the good news for the business owners is that we can leverage their time, leverage their expertise, help them grow without them having to commit to a full-time employee who's
Mhm.
going to cost whatever, 50, 60, $80,000 a year, and still not be able to produce the result that we can produce on a fractional basis, a basis that's going to cost a lot less, but that's going to provide a lot more. So it's a good business model. It's becoming more and more common, and more people are recognizing the value.